We're Compound Everything, and we talk markets, investing, and money. And today we are talking about the Witch of Wall Street, Hetty Green.
I had never heard of this moniker for her, the Witch of Wall Street, but she was known to me by another name.
And what is that?
The most miserly miser. So I used to love, when I was a kid, I used to love going through the Guinness Book of Records. And I remember coming across this lady who was so cheap, according to the Guinness Book of Records, that she refused medical treatment for her son, even though she was a multimillionaire many times over. She refused to get him medical treatment. And that got her in the Guinness Book of Records as being the most miserly miser. Now, we're going to profile her today. And in fact, actually, after reading a bit of her biography and a few things that other people have dug up on her, that's not true. So the Guinness Book of Records did us dirty.
Yes.
Well, did me dirty as a kid.
I never read that. I wasn't into things like that.
Yeah, no, I used to love the Guinness Book.
Yeah.
I used to take what it said as just absolute fact.
You would.
Now I'm questioning that.
You would read probably things like the Farmer's Almanac and stuff.
Probably true.
Yes.
But anyway, so I knew her as the most miserly miser, but she's gone by other names, which was Witch of Wall Street, and later she was also referred to as the Queen of Wall Street.
Well, yeah, barely.
Barely.
She was known that for a while, and I actually didn't know of her because of the Guinness Book of, is it World Records?
Mm-hmm.
Yeah, the Guinness Book of World Records. I had never bothered to read that. I knew of her because a few years ago I happened to stumble upon her in Barron's.
Interesting.
The Witch of Wall Street. And then when you didn't actually realize it was the same woman.
I just clued in.
Until you were reading her bio and you were like, wait a minute, I've actually heard of this.
I know this lady.
Yeah, from my childhood.
Yeah.
We wanted to study her because anytime there's a great investor, we want to figure out how they did it.
Yes.
Right? And what's interesting about Hetty Green is that it's not so much that she was female, because females invest, is that she was a female in the 1800s who invested.
And that was a challenge.
Right. And I think the reason why she was known as the world's most
miserly
miser is because she got a bad rap for being female at that time. And I don't want to get into all of that because that is just not who I am. But there is something to be said that she was a great investor in the time where she couldn't even vote.
Yes.
She was probably, I don't know for sure, but she was probably considered property of her dad and then property of her husband. Even her inheritance, she didn't have access to it. She was given it, but she didn't actually have full access to her inheritance because she was female.
That's right.
And her dad didn't trust her.
Right, so she couldn't get into she couldn't buy a seat on the stock exchange.
No, right.
So she couldn't be a board member necessarily in companies and whatnot, so she didn't have the same access of information. So having did what she did, it's impressive.
And even in conversations, like at that time, there was one point I was reading the book that you mentioned, and it says that she was out with her chaperone. Because at that time, you did not go out without a chaperone.
That's right.
And she was supposed to be finding a husband. Mm-hmm. And that's what her father wanted her to find a husband. And she didn't want to find a husband because she wanted to be part of the conversations that had to do with all these
business
upper class men who were talking about Wall Street. And so she found herself not looking for a husband and actually came home and hadn't found a suitor because she had spent all her time eavesdropping on these conversations because she wanted to know what was happening on Wall Street.
That's right.
Whereas now, like if I was in a situation like that, I could easily join into a conversation and talk about investing. No one would think twice about it.
Without issue.
Yeah.
Apparently, at one point, her father, I guess, gave her quite a bit of money to go buy a dress and some clothing and whatnot. And
when she was quite young.
When she was quite young and trying to go, nab a husband. And instead of going and buying clothes, she actually spent a little bit on the transportation, apparently, and then went and invested the rest of it in high-grade bonds.
Yes.
And apparently her dad couldn't have been happier. So she came from money. And so at the end of the day, she had a 51-year investment period. Yes. So between the time she got to actually control the amount of money that she was given to compound, and she turned somewhere in the realm of $5.9 million into $200 million over a span of 51 years. And you may say, okay, well, that's only a compounded annual growth rate of about 7.1%.
Not even comparable to Shelby Davis.
Right, not even comparable.
Compared with what he turned his money into.
Yeah, but now keep in mind that she only had access to about 1 million of that 5.9 million.
Now, why is that?
Because her father put a bunch of that money, locked up $5 million of that money in a form of a trust or whatnot. And she was only entitled to the income off that money. She wasn't actually entitled to invest that money, per se, herself.
Yeah. Now, she really got this shorthand a lot of times when it came to money.
Yes, she did.
And again, this goes back to being female, and I don't want to turn this into a whole issue on that, but it really did affect her. So when her mother died, her dad said, you can't have
this inheritance
from your other, because she came from money on both sides.
Yes.
Her father was from a wealthy family and her mother was from a wealthy family.
So she did have some advantages there. When you look at her record, though, amassing a $200 million fortune out of, we'll say, if she was able to only access about $1 million of that, she had a compounded annual growth rate of about just over 11%. Mm-hmm. So she was able to do this at a time when the Dow only grew at about 4.3%. Mm-hmm.
And we don't even have the exact dates because we couldn't totally overlap her time frame because the Dow didn't even come into inception until after she had started.
It wasn't even
a thing until after she started investing. So the best we could do is come up with that time frame. Yeah.
That's right. And so she, as Warren Buffett would say, she killed the Dow.
She killed the Dow. The Dow, that is something that Warren Buffett himself, if you read a lot about him, you'll see, like his shareholders' letters and interviews and whatnot, you'll see that is his thing. He wants to beat the Dow.
That's right. Yeah. So let's talk a little bit about how she did it.
Okay.
So she was, I think without question, the first value investor.
On record,
right? So she lived before Warren Buffett, and she lived obviously before Ben Graham. Mm-hmm. And so she was the first person to apply the tenets of value investing to investing, essentially. Mm-hmm. So she would go about and try and find undervalued securities. So I have a few quotes by her that kind of dictate her investing philosophy in a sense. She says this: "When good things are so low that no one wants them, I buy them and lay them away safe. When owning to some new development, they go up. My shares are so needed that men will pay well for them. I am ready to sell." And she also says, "I am always buying when everyone wants to sell and selling when everyone wants to buy." So she was a bit of a contrarian.
She was a true value.
She was a true value investor. "If one can buy a good thing at a lower cost than it has ever sold for before, he may be fairly sure of getting it cheap." So she liked to get things cheap. So after studying her life, we came up with 8 tenets that we think kind of helped her amass just this enormous amount of wealth and helped her literally beat the pants off the market. Mm-hmm. So the 8 tenets are these. So the first one is frugality. Second was always have cash on hand. 3, she could read the macro. 4, she bought when no one else could see value. 5, she bought right and held on. 6, she would know more about the business and industry than anyone else. 7, she vehemently did not use margin. And 8, she was willing to sell and divest when markets changed.
So why don't we go through, starting with number 1, frugality.
Okay. So frugality. So the frugality part, I think, was born of her, I guess, adherence to being a Quaker. So she was a Quaker. So her family was just known for being frugal, I guess. And I guess that was a central tenet of
Quakerism.
I was going to say the same thing, of being a Quaker. Yeah. So at that time, I guess frugality was a virtue in a sense.
No, I do want to say she's known as being cheap and frugal and all of that, but she was actually very giving. And I do want to say it's not true about her son.
No, not at all.
I looked into that a little bit, and her son in an interview actually said the reason his leg was amputated isn't because his mother denied him medical care, or is because they didn't actually know how bad it was medically at the time. And it's interesting because I have found in many different situations, the news or people will talk about a situation from years past as if it was happening in today's knowledge, right? Yeah. And so we're talking like 1800s. They didn't have the same X-ray. They didn't have X-ray.
I'm not even sure X-rays were around then.
I don't know. I haven't looked at that. But what we do know is medical knowledge was not what it is.
Well, and the funny part is that if you follow the basis of the example, he, as a young man, I think as a child, had a leg injury. And it wasn't until many, many years later that his leg was actually amputated. So the question is really, would then medical care made much of a difference at the time?
And right? Also, if the medical people had said, "Oh, he needs to have this," I think she would have paid, because he said she was just going by what the medical team or doctor or nurse or whoever it was advised them.
That's right.
So we'll put that to rest because that was from her own son.
That's right.
So, and then the other thing too is she actually supported, I think 30 families. I think it's 30. It was a fair number of poor families in the area she herself financially supported. Right. She gave a lot of money away to charity. Yep. And she actually rescued the entire city of New York from financial ruin.
Yes.
Everyone thinks it was J.P. Morgan, that story, and he is very much into it. But she foresaw it coming and actually had cash on hand to rescue the city.
Yes. And so that was one, we'll talk about that a little later. She could actually read the macro, and she saw things coming, and she knew that there was going to be a real problem coming, so she had cash on hand. Mm-hmm. And then going back to her frugality, she wasn't spending all the money that she had. So she was
She
always...
didn't spend it on herself.
She didn't spend it on herself, right? So she didn't spend all the money she had, and she knew if she had money on hand that cycles would come and go, there'd be booms and busts. And if you read her biography, you can easily see that happening through America at that time. There was booms where everything was going well, and there was busts where money was needed, and guess what? She had money.
She had money, yeah.
So that takes us to our second point, and that is that she had cash on hand. So,
and you might think that, of course, she had cash on hand because she came from money.
Mm-hmm.
But here's the thing. Her husband had money, and her husband lost all of his money.
That's right.
Lots of rich people don't have cash on hand.
That's right.
And so a lot of people will think, you read that and you're like, well, obviously, or you'll hear this point and you'll be like, well, yeah, like she came from money. Being rich doesn't mean cash on hand. A lot of wealthy people make a lot of mistakes in the market.
Yeah.
A lot of wealthy people are very leveraged, and a lot of wealthy people are fully invested at all times.
That actually brings up a good point. There was a railroad tycoon actually around the time she was investing who actually went bust. So he was actually a very well-known businessman at the time. And he went bust because he, I guess, overestimated one of the businesses he was in. And guess what? He had no money to buy anything, and she did at the time. So she, when the railroads were hitting a major snarl. And this is interesting, actually, just as an aside point. The railroads were actually kind of a growth industry at that time.
100. They were a tech growth company at this time.
Yeah.
People were going bananas into railroads. They couldn't get enough railroads.
That's right. And there was actually a railroad bubble.
Yeah, and the Brits were getting into it.
That's right.
And they pushed up these railroads. Yeah.
So at that time, when everyone was piling in, there was, of course, everyone was making money, right? But she saw the writing on the wall and what I guess wasn't buying at inflated valuations. But when those things decided to bottom out, she was all in. And those were one of her favorite investments, was railroads.
Yeah, she made a lot of money.
Yeah.
And what's interesting is that she, in the book, The Richest Woman in America, and I would actually recommend that book for reading if not interested in Hetty Green. It is a very interesting book just on the history of America. Economics, macros, America, all of that. It was a very interesting read. So it's mentioned in this book that there was just this frenzy for railroads, and then it started, there was a bust because I think it was one railroad was like overextended, and then they kind of went bust, and then banks couldn't pay out, run on banks as it goes, and things were going crazy. And then in Britain, they started pulling out their money because they started panicking.
That's
and
right.
They were like, oh, we got to get our money out, and that of course depressed the stocks even more.
Yeah.
And one of the concerns at that time, and one of the scapegoats, was the fast spread of information.
Yes.
Because technology had changed.
The telegraph.
And they said, if it wasn't for this wouldn't have happened. And I just kind of chuckled because now I'm like, oh gosh.
Yeah.
We have fast information now. Yeah.
Well, it's funny, right? You see that same thing now. We have internet, right? So that's fast relay of information. But also we still have booms and busts. And we also have growth stocks that catch favor. So just like railroads. And they'll eventually decline when they go out of favor. And at that point, if you're like Hetty Green, you have your buying opportunity.
Right. And
so it's just a matter of being patient.
Exactly. And then just to finish off that story, where I was going with it was that Britain was like, we're out of railroads. And the Americans were actually able to buy back in on the cheap.
Yes.
And so it was interesting to watch the growth of America at this time.
Yes.
Because they were not the America we know today.
No. And one interesting biography we reread said basically America was built off of foreign money.
Yeah.
Which is really true because all these foreign investors lent capital, built all this infrastructure.
They were excited.
Because they were excited. And then as soon as things went kind of bust, then they were out, sold the shares on the cheap to Americans.
American banks, American investors.
And American investors like Hetty Green who were able to buy them up on the cheap and, make a mint off of it.
It's actually a very cool story.
Yeah. Funny enough, and I could be mistaken here, but that to me almost rings true of what's happened with China now.
Yeah,
and I could be wrong on that, and time will tell. But maybe there's something to that.
Yeah, it's definitely interesting reading those stories, thinking like, oh, America at one time, right? It would have been an emerging market.
That's right.
Right, it wouldn't have been like how it is now. So it's very interesting to just step back and say like, oh, like is that happening anywhere right now? Where our money from developed countries is going into lesser developed countries, and then you're pushing up the stocks. You could think Alibaba got pushed up. All of a sudden, everyone's scared. They pull out. And now what? Baba's buying back.
Alibaba's buying back shares on the cheap.
Exactly. So it's interesting to see.
Cycles happen.
Yes.
Okay. So a third point was she was very in tune, I think, with macroeconomics. She could read economy and whatnot, and she actually called one of the recessions about 3 years before it happened. And she goes on record as saying so. She's like, I called it. And she kind of, I guess, rubbed people's faces.
Yeah. And she had the money to prove that she called it because she was waiting for it to happen.
That's right. Yeah.
And then she, of course, we all know she rescued a lot of people in that time.
And cities, like entire cities.
Yeah. So I think in part she knew the macro because she didn't have an MBA. She didn't have a business degree. She wasn't an economist.
No.
And you're like, well, how did she learn all of this? And again, particularly being female in this time frame, her father and her grandfather had her read the financial paper to them because their eyesight was poor.
Yes.
So by the time she could read, so at around 6 years old, she was reading the financial news to her father and grandfather.
Yeah.
Now imagine how many busts and booms she had read through.
Oh, yeah.
By the time she was investing her own money, she just knew that this happens.
Yeah.
History repeats itself because she'd been reading it for those years.
Yeah.
And I just couldn't help but think of Rose Blumkin reading because here is Hetty Green reading the financial news at 6.
Yeah.
Literally giving herself an education.
Right.
Becomes one of the best investors in that time.
Yeah.
And then you have Rose Blumkin, who is helping her mom in her store at 6.
That's right.
Running a business at 6. Could never read or write.
Yeah.
Right now, Hetty did have a good education.
She did,
but Rose didn't. And she becomes one of the best businesswomen of all time.
That's
and
right.
they both started when they were very young at the feet of their parents.
Yes. So that says to us as parents, you know, we should be teaching financial literacy to our children. I think
100%.
that's an important point.
It should be a second language.
Should be a second language.
Yeah.
The other thing, too, that Hetty got was an in-person education. She got like an in-person MBA because her family ran this whaling industry.
That's
so
all
she
they
was,
talked about, she said.
Yeah.
That was all the family talked about all the time was just business.
And so she'd go down to the wharfs and she'd watch probably her dad and her grandfather negotiate business contracts and things like that. And so, you know, she had that opportunity to observe them doing business, getting into numbers, and she, I guess, financials would be second nature to her at that point.
100%. And she also saw, back to macro, this isn't macro, but she was, because her dad was in business, she saw business cycles. So she knew the macro because she had been reading the financial news since she was 6, so she had seen it so many times.
Yes.
And there were some pretty big booms and big busts at this time.
That's right. Oh, yeah, absolutely.
She also watched her father study the industry and be wise enough to shut that company down when oil became a thing. When he started realizing, oh, there's this new
liquid called kerosene or whatnot. So people started using kerosene lamps. And he saw the writing on the wall several years before the whaling industry went bust.
And so he knew when to shut it. So she knew that there was booms and busts and cycles in macro. But she also knew that there were booms and busts and cycle in business.
Yes. That's right. So the next point is she would buy when no one else could see the value in something, or she was able to appreciate value when everyone was afraid.
Yes.
So she actually made a mint off of railroads. So she also made a mint off of war bonds, apparently. So let's talk about that a little bit. So what was the problem with war bonds? So war bonds, I guess, at the time, I don't know the ins and outs.
Civil War.
Civil War bonds.
She grew up in a very politically
there was civil unrest.
Charged up era because we're
Time
talking
of slavery
like Abraham Lincoln, like we're talking that era. So there was always like political issues and big issues hanging in the balance. Yeah.
So at that time, I guess war bonds were a thing, and I guess it was to raise money to buy weapons and infrastructure and all these things. And so I guess, and I'm not sure of the details on this, but I guess people got afraid of war bonds, in part because they thought they were going to get paid back in greenbacks.
And they didn't want dollars.
And they didn't want greenbacks, they wanted gold. So this was when money was actually on the gold standard. So they actually wanted the physical gold. They didn't actually want this paper money.
They were afraid that they were giving out more paper than was linked to gold, and in fact they were.
That's right.
They were issuing more paper than they had gold. So there was a good fear there, a reasonable fear. That's why.
Yeah. And so the bonds apparently were trading at a discount to their intrinsic value as the gold that they were, I guess, backed by. Yeah. But Hetty had the, call it wherewithal or the wisdom to say, you know what, I think this is going to be bad. If they pay us everyone back in greenbacks, that's going to, completely destroy people's reputation and whatnot. And she said, I don't think that's going to happen. So she made a macro call, basically, and a judgment call. And she ended up being right.
Yeah.
And so...
That was a ballish move.
That was a ballish move, right? Baller move, ballish move, whatever you want to call it. But in the end, she made a lot of money off that because people were afraid. People were afraid, and she accurately judged the macro.
If you can watch people's emotions, you can make a lot of money off of fear.
Yeah.
A lot of money. That was like, COVID. We went through that. There was so much fear.
Well, think of the oil stocks, right?
Yeah.
Oil stocks was an example of that. Oil was trading negative. Like, since when does that happen?
Yeah, like it's
negative. Like, people are paying other people to take their oil off their hands.
You can make a lot of money off greed too and sell, but you can make a lot of money off fear. Fear is a crippling driver for people.
That's right. Yeah. So they still happen. This still happens. You just got to be ready for it and have
cash on hand.
The
way you get cash on hand is sometimes being frugal.
See, it's an engine that drives itself, right? We're seeing how that works. The next thing about Hetty Green is that she had wisdom to buy right and hold on. So we talked about war bonds being a good investment. We talked about railroads. Now, railroads were, again, a growth stock at the time that became depressed. And she used that opportunity to pile into railroads. Those were one of her favorites. So she had mentioned her favorite investments were railroads, war bonds, and real estate.
Yes.
Funny enough. And so I guess America also had a tailwind, right? So the temptation oftentimes as investors is to just kind of sell when it goes up a little bit. But that's not how you make big returns.
Right. It's not how you make 10 baggers or 100 baggers.
Railroads are still going on. People are still using railroads. They're not necessarily a growth stock anymore. They're a mature business, right? But they're not necessarily one in decline.
Right.
So if she had just kind of made, a two-bagger and then sold, she wouldn't have made the returns that she did.
Yeah.
And so I think there's something to be said for her buying right and holding on.
And I think your next point is that she knew more about the business than anyone else. So I think we can actually tie that into buy right and hold on.
For sure.
Those 2 points. Because the reason she could hold on is because she knew so much about the business.
That's right.
She was an avid study of her businesses.
Yeah.
She loved to talk markets, study markets, read about markets. Like, she lived and breathed investing.
Yeah. So it was said of her that she had a far more in-depth knowledge of the business and the industry than anyone of her contemporary. So I found that interesting. So she'd have the strength of conviction to hold. Yeah. So again, railroads still being used. She had a quote here, and it says this. It says, "There's a price on everything I have. When that price is offered, I sell." So she also knew when to divest, and we kind of talked about that already. So the next point is she was vehemently against margin. And she mentioned several times that when she bought stocks, that just as an aside, I did not use margin.
Yeah, she would say that. And I think in part that was part of her natural disposition and religious in her own character. And then I was going to say, I think the other part is I wouldn't be surprised if Quakers weren't allowed to use margin.
I wouldn't be surprised.
I've never looked into it. I'm probably not going to look into it, but it just seems like that would be something that they would be raised, like you don't do that.
That's right.
Or if you're going to do it, you do it carefully.
Yes.
Now, I already mentioned Shelby Davis earlier, but one of the reasons, in part, I think he did so much better than Hetty is because he loved margin.
He loved margin. Yeah. He was leveraged like crazy. Yeah.
He also blew himself up a few times, though.
Yes.
Hetty never did.
No.
So, you live by the sword, die by the sword.
That's right. And I'm reminded of a quote, and I can't remember I think it was Peter Lynch who said, "A business that has no debt cannot go bankrupt."
Yes.
Similarly, people that don't have debt can't go bankrupt.
Right.
And so we had mentioned previously about the railroad investor who went bankrupt, which, basically busted him. And then Hetty was able to come in around that same time when this man was bust and go in and buy railroad shares and make a mint off of that. So, I mean, again, it turned out to be wise.
Yeah, and she made a lot of wise decisions when a lot of people did not make wise decisions.
That's right.
And her own husband blew up his own account.
That's right.
And then the banks actually expected Hetty to bail him out and cover his debts. And it sounds like that was actually illegal because that was her money.
That's right.
Now, they actually had some sort of like prenup, kind of like before prenups were a thing.
Yes.
So they had separate money, and I guess wealthy people do that. I don't know. But anyways, after that, she was like kind of so annoyed with him and so irritated with him that she like pretty much just kicked him out.
Yeah.
Stay married with him because at the end of his life, she was back taking care of him.
Yeah.
But she was like, we just can't.
Yeah.
Like, we can't do this together anymore.
That's right. And he had, I guess, had a very different thoughts on the use of debt.
Yes,
obviously.
Exactly.
So,
and she was, no, we're not using margin. And yeah.
And so I think at that point, it doesn't do you any good to make, 30% compounded annual returns over a period of 10 years just to go on the 11th year and blow it all up and go bankrupt. It doesn't do you any good. So better to make it slowly and consistently the way she did and be able to hold on to it rather than to blow up your account, which is what people have done so many times in the past.
Well, pretty much all those rail guys. It's interesting to read about that bustin' rails because I cannot remember, and I know I was talking to you about this yesterday, and I cannot remember who said it, but they said, if you're watching lending, watch lending, but don't watch the people who are borrowing. Watch the lenders and who they're giving money to.
Yeah.
And it sounds like they were giving money to everyone and anyone and just extreme amounts.
Yeah.
And then all of a sudden there was this huge bust that we mentioned earlier. And then banks, you couldn't even get a loan if you were like the most pristine, economically clean person out there, and the interest rates went way up.
Yeah. And the funny part is the banks at the time, in her biography, it mentioned, just as an aside, that the banks wanted hard assets as collateral. Stocks and bonds meant nothing.
Nothing.
And so you could see how someone like Hetty could go in there, swoop in, and buy assets that were legitimately on these businesses' balance sheets on the cheap.
And that's probably why she liked rail. It's probably why she liked real estate. She did do war bonds, but bonds weren't actually her favorite thing.
No.
But she just saw an opportunity. She was great at sniffing out opportunity. And just to go back to the no margin thing, I think there are a few people out there, a handful, who use margin and they do really, really great at it.
Yeah.
But I've heard of way more stories of people really losing their shirts with margin.
Well, as I said, it doesn't do you any good to make 30% returns for 10 years and then all of a sudden on the 11th year lose it all because you're on leverage. Because that can happen.
And like no one knows who her husband is. But we all knew who the Witch of Wall Street is.
That's exactly it. Bottom line.
Exactly,
That's
exactly.
Right. If disaster strikes and you're on margin, you might be forced to sell the assets that you have exactly when you should be buying more of it. So that is not a way to compound growth. This is to sell good assets on the cheap.
Yeah.
So again, avoiding margin, probably a good idea.
Yeah.
So the last point that we came up with, we've kind of already touched on a little bit, and that is when markets change and when businesses change, you have to be willing to sell.
Yes.
And so I read a quote by her a little bit ago when it talked about, everything I have has a price. And when that price hits, I'm willing to sell. And again, you have to know the businesses you're in. And she knew the businesses that she was in. And again, I think observing her father probably helped with that a lot.
Yeah.
He called the demise of the whaling industry about 6 years, it said, before it actually happened. So he saw it early and he got out. Yeah. And he was not under any delusion that the whaling industry was still going to be a thing when something new and better came along. I think we as investors can take some lessons from that as well. I mean, businesses change, economies change even. But when business changes, I think it's time to, if you know your business, it's time to get out. So I think of businesses like retail industry and whatnot that was disrupted by things like Amazon. Think of Kmart, which is now gone bust. And Blockbuster with Netflix. Kodak with film. BlackBerry with iPhones,
with the touch keypad on the screen.
So again, these things still happen. So again, we should know our businesses just like Hetty did.
And I feel as you get older, now that we are starting to get older, you start to forget that things do change, and things are going to keep changing. And no matter how deep a moat is, that doesn't mean innovation can come and take it away. And so, for her father, like, kudos to him to see it, because how many people in the whaling industry didn't see it? And same with like horse and buggy when cars started coming. And we tend to, I don't think we're pretty good at this, I feel like, but you'll talk to people within our demographic or a little older, and they cannot foresee. They have a really hard time foreseeing. They're like, oh, well, it's never going to be like that. And it's like, well, no, like it will probably be like that. And they have a hard time thinking that things are going to move over, that people will adapt to the new way or be forced to adapt.
That's right.
To the new way, right? And
that's right.
You even think of credit cards. Like, I think in the 1980s, not very many people had a credit card, and now I don't ever see anyone paying with cash.
Yeah.
I know in America, when we go down, we do see more people paying in cash, but in Canada, no one uses cash.
No one uses cash.
So that's like an adaptation. But there was a time where people were probably like, oh, everyone was going to keep using cash forever.
Yeah. Well, and the thing to say about that now as well is I think cycles and businesses change maybe even a lot quicker now than they used to. And so, again, her father... more disruption. Again, her father could see when this new product called Kerosene was coming out. And there's black stuff that came out of the ground called oil.
That's what he said. He's like, what's this black stuff coming out of the ground?
But he could see the writing on the wall that it was better than whale oil, and it was going to be cheaper, and it was going to be more widely used, and it was abundant. Because he knew his business, he knew his industry, he knew, okay, this is over.
So if you can just watch where the ball is going, you can make money by selling out of your good companies, and they probably were good companies at the time, not necessarily at the top because you can't call the top, but you can sell out before they start to decline because innovation is going to come in and eat their lunch.
That's right.
And this is an example probably of maybe why she liked real estate. It doesn't really change. Rail. Like you said, rail's still a thing. This is why Warren Buffett, said to Bill Gates, well, are people going to change the way they chew gum?
Right.
No.
Yeah.
Okay.
Okay, I'm in.
Right. So, there's a lot of lessons to take from this.
Yeah. So I think, if we really kind of summarize in a nutshell, what were the virtuous drivers of Hetty's success? I think was her frugality. She lived below her means. And just as an aside, actually, she never bought a house. She never bought a mansion, apparently.
She always rented.
She always rented. And we talked about that in our last video.
She's very progressive.
That's right. On that vein, we had not studied Hetty yet.
Not in detail.
Not in any detail yet. So I found that comical that she was frugal and that she never bought a place.
Yeah.
But she invested in real estate.
Yeah.
Her frugality led to her never using margin, but always having cash on hand.
Yeah.
She had a wisdom with markets because she had a
drive to study it. She was interested in it, but she also had an education in it and was good with numbers, and she had just a sense of financials. And she never stopped learning.
No, she never stopped learning.
That's the thing. She was always learning about the markets, always learning, always watching. It was a continuous thing for her.
That's right. And along that same vein is that drive to learn also forced her, or maybe not forced her, but drove her to learn more about a business and an industry than her contemporaries. So she had strength of conviction to buy when others wanted to sell, and sell when other people couldn't help but buy.
Yes.
So I think, to summarize, in the end, really, if you want to beat markets, if you want to really do well in the stock market, you need to be able to do one of three things. One, you need to be able to pick out things that are happening at current that other people haven't appreciated yet. Yep. So pick out assets that people have undervalued.
Or maybe not. They did appreciate at one time. Yeah. And then love lost.
That's
right.
They're
still a good asset.
Right.
Yeah.
Secondly, you maybe need to be able to buy into things that people are afraid of buying into at current, for whatever reason that is.
Yep.
And then thirdly, if you can't do those two things, you need to be able to project into the future. Yes. So if you can see where the ball is going and project it to the future where people haven't appreciated yet, then you can...
That's very hard to do.
...make money there too. But it turns out Hetty could do all three.
Which is why she was who she was.
Which is why she was who she was. That's right.
So you might be wondering what happened to all of her wealth.
Yep.
Because she came from money.
Yeah, you don't really hear much about her anymore, really.
Nope.
Honestly, so what happened to her wealth?
So she had 2 children, and those 2 children didn't have children. We don't know why. We couldn't find out, and they just, in passing, and at the end of it, all of Hetty Green's wealth ended up going to charities. And it is no longer in any family line. And
we were talking about this, yesterday, I think it was, just saying how sad it is when money just kind of goes into organizations. Oftentimes it just kind of disappears.
Because because like her parents came from money, and then she came from money, and the money kept growing. And she was very generous as a person, as I alluded to before. And then it went to her children. And had they had children, foundations probably would have been started. Like you have the Hershey Foundation, you have the Hershey Trust or whatever, and they give a lot of money and they do a lot of things. And Warren Buffett gives to charity. And once that money is given to charity, it's gone. And it's not that it was bad that it was given to.
No, not at all.
You don't compound it anymore.
Yeah,
it doesn't grow anymore. So it's just kind of like a sad end. And it was sad to me that neither of her children had children.
Yeah,
and. Just the way it is.
Yeah. I mean, it's good that the money went to charity. Don't get us wrong. We're not saying it's bad for her to have given to charity.
But you could have given more to charity and that's an interesting thinking that people have, because a lot of people be like, oh, it's great that it went to charity, because a lot of people get their feathers ruffled when they hear that people have a lot of money. It's not, people don't like that.
Yeah.
But if it stayed with the family, more charities would have gotten more money, because that money would have, presuming they were good investors, would have also continued to compound.
That's right. Or even put in a trust of sorts, kind of like the Hershey Trust and whatnot. And so where there's a directive to allocate that capital to generate more capital to continue to give.
Because people helping people helps people.
That's right.
Yeah. I wanted to touch on that because there's nothing much out there about her, and it's partly because the family line, as far as investing goes, just kind of stopped.
That's right. Yeah. In terms of, compounding and capital allocation. That family line is now done as far as we're aware.
Yeah. So that is a very condensed version of her life. I would definitely recommend reading the book, what's it called? The Richest Woman in America. It is very good if not interested in her, just for the interest of America's economy. It's a very good read. And I personally love to study her because to me, investing is one of those things that if you're willing to study it, anyone can do at any time. Anyone has access to do it. And here's a woman who couldn't vote, whose husband
blew his account up,
whose father kept her inheritance from her.
Yeah.
And then later, she actually had another inheritance come in that was kept from her, who was definitely treated not great in the investing circle, but here was a woman who was able to do it and compound and make more money than most men to the point of saving New York City, or at least helping in that process.
Yeah.
And that is what I love about investing. It's there for anyone, and if you're willing, you can do it.
That's right. I think that's a good place to stop. I hope you guys found this conversation useful. We found it very useful studying her, and we'll see you next week.